TM. What's going on, everyone? Let's get going. Let's get going. Let's get going. Let's find a groove. Mic check, mic check. What's going on, everyone? We still got a little music playing in the background. We're going to get this going, and we're going to get this going right. And we're going to have a really good session today. I hope there's a lot to talk about today. We want to get into, obviously, TA, and we want to do TA for beginners. TA is for beginners. What? You got to master the art of trading. It's absolutely sure. It's absolutely true. Whoa, the coffee just getting started over here, brewing, getting ready to sit down with all of you and make sure we take a strong look at the markets. A lot has changed in the last 24 hours. And what I am talking about, and specifically, is we have this morning the Fed Whisperer, right? Leaking through the Wall Street Journal that we are looking at a 75 basis hike in September. This is actually a really something introduced to the market that obviously the market is now pricing in 80-90% chance of a 75 basis point hike in September. Also changes my perspective when I really honestly believe that the market was currently data dependent, including that the Fed was data dependent, and that this week's or next week's CPI really was going to be almost the deal breaker, whether or not the Fed raised 75 basis points or 50 basis points. We have 4 Fed speakers on the docket today. I assume all is they're going to be doing is what they've continued to do, is not come off overly hawkish. And it's going to be very interesting to see in light of this new information. Again, one thing's for sure. If you want to be successful, you have to be able to adapt to the markets. And when new information is presented, regardless of what beliefs that you were holding or under, you have to be able to go ahead then and be very malleable and adapt to the market. We need to not only watch what the Fed is doing. It's a big deal, right? Moving from data dependent to no longer. By the way, what's really interesting and what was noted, the reason that the Fed is leaning towards a 75 basis point hike is because they were uncomfortable how much the markets rallied. Remember that bear market rally? And what it did was ease financial conditions. In the interview that I hope to release by tomorrow with you, that was exactly how I viewed the whole rally that took place. It had undone all of the Fed's tightening and work. It's why the Fed speakers before Jackson Hole had to come off overly hawkish, and then Powell did. So that's nice to get that type of affirmation, but it does put us in almost in a new situation now. We're going to have to be, open. Again, just one thing that I noted just for a second earlier, I want to emphasize once again, it's going to be really important today as the market begins pricing in a tighter Fed to see what the market's reaction is. That's going to be a big tell, I do believe. And that kind of opens up the door. Whereas what happens over here now, next Tuesday, as we have the CPI, what happens if this CPI does come in soft? Or is it possible, by the way, I wonder, is the reason all of a sudden the Fed have to do even more tightening? Is it because that they want to get them done rapidly and quickly and then give them time to take effect? Or is it because we have this counter influence taking place, not just by the government in the United States, as we've seen this loan forgiveness, we've seen certain states across the nation go ahead and counteract these high prices with further stimulus, but we're also seeing that now really pronounced in Europe. So I wonder, I don't know, and I don't pretend by any means to have the answers. I'm here to figure it out each and every day, and that serves me well. A couple of things, perfect storm is set, doom and gloom are paramount. Will this be the first time everyone saw a crisis coming? I don't know. It very well could be, right? People today are a lot sharper and sharper and sharper and sharper, and that's why we did actually see the front running that took place, that market rally took place, and that's, again, also why it was smashed so quick. Moves seem to be quick and sharp. Top 3 reasons. Look, these things that are changing from my own personal thesis. Again, always adapting to the market. Fed tightening 75 basis points in September, no longer data dependent. It's huge. It's a huge game changer. Liquidity was abundant, is drying up quickly. I wish I had a chart to share with you. I maybe in tomorrow's session. But that is also a big deal. I've been always talking about, as people expected things to break, the Fed's going to tighten to things break. Many people that expected already April and May, things would have had broken already. We're now into September. Everyone's looking for this like massive volatility. That volatility could work both ways. Right now, it's to the downside, and it could continue to be, or it could be also to the upside, but expect volatility. But it is worrisome that we are seeing now liquidity drying up, and that's part of the perfect storm setting up. And then we have the EU keeps making really bad moves, really bad, like almost, it seems to me to be, it has to be controlled demolition. There's no other way that you can make such poor choices over and over and over again. And the Bank of Japan is under pressure once again to defend their yield curve as the 10-year in the U.S. continues to rise. So those are three things that are paramount. And this one is overall. When you talk about the nation state debt spiral, that's something that is not going to induce a crisis immediately, but that is the long-term crisis. Big shout out, everyone down under. Big shout out to everyone down in Australia and all over the world. Oh, my friend, great to see you over here. Speaking of all over the world. Shark, I don't disagree, but he doesn't act like a know-it-all. I'm just jumping in a conversation. I have no idea what you all are talking about. So anyway, let me get back and continue over here. Look, I just wanted to highlight once again. You'll see it in the coming interview. It was so well articulated before the Fed come out and through their Wall Street Journal mouthpiece articulates that, listen, the reason that they had to kind of do an about face, and it was only because of the market's reaction, and the market had undone all the tightening almost like within the 2-week period very rapidly. It was very concerning for the Fed. And then here we are back down where we started from. Update on the technicals. Let's just read the 6 things and then I'm going to get into the charts over here, right? So it's ugly out there. We got the energy crisis in Europe and everyone, and in a good way, in such a good way. I love how people out there over on the World Wide Web are able to adapt and just dive into whatever they need to learn about what's ever important, almost becoming, quote unquote, and I say it in a good way, not in a bad way, but experts in everything. And it's really neat, especially to see the younger generation out there being so well diverse in their tools and their knowledge. And it really gives me a good feeling about what tomorrow brings. So that's beautiful. But energy crisis in Europe, everyone is following it. Central banks tightening. We're looking now at 75 basis points from the ECB on Thursday. By the way, expect the fireworks to continue. That's why I really want to start getting into some charts with you all. I feel like we are now getting ready here as everyone's back from Labor Day in the U.S. We're getting ready for ECB action on Thursday, and then we're getting ready for the following Tuesday, CPI. Does that become less relevant now? I think so. What's going to happen if we get a soft print now? That's, before it was like, well, it matters what the print is, and that's going to go ahead and change the odds of what the market price is in. That's now all adjusted. I mean, I haven't had the time yet to sit with it and formulate my own view and opinion on what I think that's going to mean. But I will be. We have 1 week ahead of us. ISM data is not supportive of slowing growth, need for tightening purposes, right? So the ISM continues to be weak. And with the weak ISM, how is the Fed going to continue to tighten? Is that maybe why they are getting in or looking to see at the U.S.? Not this is from the ECB, but is the U.S., the Federal Reserve, shouldn't even say U.S., is the Federal Reserve looking for a 75 basis point hike because going forward, ISM is not going to support them tightening once we go into contraction under 50. I don't know. Could be. CTAs remain sellers in good size. We've seen or we're aware coming into this last week that we would see a lot of CTA repositioning. By the way, they flipped buyers at the very top. We caught the turn at the bottom, but they flipped buyers at the top. So they're chasing momentum and they're chasing it late. That's never a good thing. Corporates headed for blackout window ahead of earnings. Earnings is going to become the main focus of the markets very soon. And then we have from seasonals, poor sentiment out there. Everyone is expecting September to be doom and gloom. And so far, it's off to a good start. I mean, it really is. So, what else do we got going on the calendar? All right, let's get into it a little bit over here. And we're going to start off with Bitcoin continuing to just really hold on to this short position. It's like 18% into profit right now. And you just see, by the way, let me just draw up or put up the marker. And before I even get going, I want to put up my brush also. Just give me 1 second here as we get going this morning. I mean, I could start a little later in the day. The thing is I have to kiss the kids before they go to school. 5 of the 6, getting breakfast ready, getting out the door, and just got to make sure that we take care of the most important things, right? So entering ghost mode, and then we're good to go. So what we're seeing or looking at, by the way, is we're just seeing consolidation, right? We had this one consolidation pattern that broke out to the downside, followed by another consolidation pattern, broke down again. Now, we had over here on the left side of the screen, which is the buy side, we had this descending wedge over here, and we were using this as, old school TA. CTM 1.0 changed the lives of many people, giving them the ability to be able to not only see and trade all markets, but make sure that they're on the right side. But we always compare CTM 2.0 versus 1.0. And here you could see a breakout of a descending wedge would normally be a buy signal. In this case, we stood aside because we were in a short position, no buy position taken off. And you can see that, well, in this case, this is a check mark here for CTM 2.0, as it kept you not only out of a bad trade, but in a good one. And then I think that you could extend this line over here down. I'm just going to extend this down over here, right? And is that a good look? Let's tighten it up. Yeah, we got a little bit more room down over here, even still. So that's Bitcoin. Ethereum was a little bit different. Ethereum out of this descending wedge. Now CTM 1.0 would have normally taken on the breakout, it would have taken an entry right over here, right? Out of the breakout of this beautiful descending wedge. And CTM 2.0 taking a buy entry on Ethereum over here. It wasn't in a short position. Unlike Bitcoin, right? Again, Bitcoin just straight down, had a beautiful consolidation. That's a bear flag all day long, and then continuing to hold and and this, by the way, was before Jackson Hole. This short over here was taken before Jackson Hole, coming into Jackson Hole, holding from a position of power. That continues to hold. Ethereum a lot different, and you can see the relative strength Ethereum has been showing to Bitcoin. Ethereum yesterday taking a buy position, and what I would say, or what one might say, is late compared to what CTM 1.0 would have had it. Not too much late, but definitely $50 difference. And that trade quickly and abruptly stopped out. Not only stopped out, long position then initiated, and that's currently barely into profit. One of the things that I have been pointing out personally was that coming off massive gains on the downside, right? Then on the upside, and then again, putting in not a massive gain, but putting up another 5.5% gain. I expected, knowing my win rate is about 30%, that statistically, I mean, every trade I enter, I like completely detached Zen style fingers for, ring finger and thumb, ring finger, forefinger and thumb, like in the circle, legs crossed. And then as so the dollar sign would have like fire on each side and just feeling like completely detached. But expectations are, that 2/3 of the trades are going to stop out. So I was expecting or setting expectations going ahead that what we're looking at going forward should be a series of trades stopping out. But the market is in such a place, though, not on Bitcoin. Bitcoin's in a pretty strong downtrend right now. You're not going to see any buy-side trades flipping off until momentum is regained. That's not happening tomorrow. But Ethereum is in such a place where both buy side and sell side trades are able to flip back and forth relatively quickly, and now into a short trade. And again, just like the last buy trade, I expect it's going to get stopped out. I am more than comfortable with that. And it's been paying well. 2022, 235%. And notice both sides. It's the long side, 109%, and the short side, 125%. And look at the drawdown over there, right? TA is for beginners. TA is for beginners. I know that you're probably not ready to accept that, but you will one day. And over here, yesterday shared, since March, right? This is Ethereum. 141%. This is with this is with light leverage. I'm sorry. This is with light leverage. 141%. When we talk about light leverage, we're talking about things like 1.25 times. Talking about light leverage, but I want to make sure, because what is needed is no leverage. What is needed, these results over here is with no leverage whatsoever. No leverage. All right. Let's take a look at some charts and find some potential setups in the market so that we could get ready here to attack in these. There it is right there. There it is right there. Bring in the fire. Bring in the calm. Boom. Do I think CTM functionality on lower volume is better? So when you talk about so let me I don't know if I'm answering the question as you're looking for, but let me go ahead and answer this question as I view it. It's a good one. And then we'll get and start looking at the charts over here. The way I see it personally is that low volume, and I'm thinking in the crypto space, and I'm thinking alts, outperform. There's no question about that. If you look at the recent performance of Ethereum on the buy side, although a 52% gain is a nice little take, especially in just a few weeks, Ethereum Classic, massively lighter volume, put in a move that was more than 2x the size. And you see that all over the place. We do view and like to view Cardano, right? Cardano is able to put up some really sizable turns. Now, the rest of CTM has been able to continue fine-tuning and working it out to get the drawdown to be really acceptable. This is only since 2021, right? But at the same time, I prefer Ethereum. I prefer Bitcoin where there is a lot of volume. I prefer to, and with the size that, I prefer to be in high volume markets, and the potential is massive already over there. If I knew at any point in time what altcoin was going to be popping off, what altcoin was going to be in favor, what the next VC play was, well, then I would focus over there, but I don't. And the playing field is too vast and it's too great. And it's something that's almost like put in the category within my team of like experimental. And there's a certain section that are always working on that, and they're very focused in various altcoins. And I myself, it's almost like, well, I struggle with, do I want to even include Cardano in my portfolio? It's a great trading pair. I think it's going to continue to be as such a great trading pair. And when I talk about continue, like I'm trying to look out maybe right now, like 2 to 3 years. Like the space is going to massively change over the next year, over the next 3 years. And just as I showed you talking about the current market, the macro, that you need to be able to adapt and evolve as new information is presented. That continues with everything. Like the world is moving. You can't just stand still. But I think that the safest and best execution is for myself, Bitcoin and Ethereum. It brings up some type of like tension, does maybe I just want that Bitcoin position in cold storage. And then maybe, for trading accounts, maybe it's just Ethereum or maybe Ethereum and Cardano. That might also be something that I myself find over the next several months, maybe morphing to. But, as far as light volume, I prefer volume rather than light volume. I think that a lot of people, they look for, let's say, outsized gains in order to try to make up for like where they perceive themselves to be. The way I look at it, if you want to know where you should be, you should surround yourself by talent. you should surround yourself by people who not only know what they're doing, but are looking to take you with them. That is where you're going to get much further than trying to take risks in the market in order to try to make up for lost time. Because usually what happens is that time passes and then you're not in a better situation, right? We had, someone with us who is a really important piece. And, over 4 months, taking 5,000 trains across various altcoins, and was like, man, if I just would have executed off Bitcoin and Ethereum, I'd be way ahead. And by the way, trying to make up for like lost time and things like that. I mean, are you like that is in an 8-month period? That's outstanding. That's outstanding. So don't try to take shortcuts. Try to like be sure the sure shot. That's what you should be looking for. All right. So let's keep going over here. If you're happy to be here this morning, this Wednesday morning, Dave, big shout out, hump day. Let's go ahead and smash the like button. We only have 152 people in here. Well, that's good. I am more than happy to wake up and get going here and share my views of the market with 150 of you all. You're a good group to be surrounded by, but go ahead and take a second as we go ahead and continue throughout and show some support, show some love, smash that like button. I'm looking at the DXY over here. The reason I'm looking at it is, so we're taking broad strokes. By the way, like the trend is up. Not only is the trend up, the trend is up massively, right? And although over here we've talked about why we saw double black diamond, sell impulse setting up, counter trend, and we called it out. I think that was more along the lines of bad word, prideful, right? The smart trade would have been seeing the liquidity over here, the liquidity grab faded back above the trend line, beautiful trend line break, and going with the trend. That right there is the money shot. Right? This is momentum with you. And for every right reason, the TA showing you trend line break after a false breakdown. This right over here, all you need is a few of these, a month, and you're going to be outperforming. No question about that. But you need to go ahead and see it in real time and be prepared. You want to think like a predator. A predator does not get in front of the screen and start kicking off trades, floundering about, right? By the way, it's not often talked about enough. Be careful and understand one of the most important pieces of your trading is the cost of doing business, what your fees are. When you see people out there promoting exchanges that have high fees, you just know that, first of all, they have no idea what they're doing. Second of all, you have to wonder, how could they be doing that to other people? For example, if you're trading any of the strategies that I deploy, which don't trade that much, I trade off the 8-hour time frame. You're talking about approximately, on Ethereum we were just looking at, 21 trades over 8 months. Is that correct? I don't like to say things that aren't for sure. Hold on one second. Yeah, 21 trades. That's for sure. It's not over trading, but if you were to take Coinbase fees at 0.5% per trade, that system will fail. That system won't even be profitable any longer. You have to be very careful and meticulous about the way that you approach the markets. The markets is not any type of casino where you could just show up, not put the work in, not go ahead and dot your I's and cross your T's, and not come in to the arena prepared and expect that you're going to thrive. You might have a few good trades out there, and then you might be like, oh, well, it's like golf. Does anyone ever play golf? And you go out there and you play 18 holes, and then when you're coming off and you're talking with your buddies, you talk about, do you remember that shot on the 12th hole when I was on the fairway and I put it 190 yards onto the green? You remember the good shot, but you're not focused on, hey, my short game was really lacking. If I was paying more attention to my short game, I could have took 10 strokes off my overall game. That's the difference between someone who's out there as a piker, and someone out there who's going to go ahead and improve their game and go far. So that's the first golf analogy we've ever used here at CTM. So that's a first as we continue here this morning. So I was pulling up the DXY over here, and I have this line over here, this green line, just to show us when would be the first next opportunity at potentially looking for some type of sell impulse, and not to take it for selling, but what this would be, and no one's in this trade, no one that I know is in this trade to the upside. If you were in this trade, when are you exiting? So what we're going to be doing in real time as we continue now going through a bunch of charts is not only picking out setups, but for those who are in a trade in the future or would be in a trade, looking how to manage those trades and when a potential exit would be. So if you're long here, the DXY, this is like your first indication that this a sell impulse could be beginning and this trend could be ending. Now you could take it further and say, well, this is also now a double black diamond line is presenting itself, and that would be similar to this. Here's what the thing I'm just going to do with you for fun, just so when you're watching in the days ahead and this happens, I want you to know and understand. I'm not going to take, or we're going to avoid the first sell impulse, right? And if the first one continues and is successful, it would be the green one, the green light, green for go, that we say, all right, that would be the exit. Now, if there is a sell impulse on this double black diamond line and then it's faded, we're going to go ahead together and we're going to readjust that line to whatever it is. And then we'll look for the second and third impulse. All right. Does everyone understand the plan? And then we're going to go ahead and, ooh, Dave, I can't wait to take my boy to the family to their first game. Ice hockey, favorite sport of sports. Dave, I one day I'll get out there. One day as these kids get older, I will get out there again and look forward to maybe meeting up one day. Let's take a look across what's going on over here. Oh, so this is the first time that I get to look at the markets this morning, right? And, we see what is Jordan thinking? What are we thinking together? Well, started off this session saying, well, the market's reaction is going to be important this morning. And the markets are kind of like now, obviously pricing in the Fed looking for a 75 basis point hike. Now, it would be a pity if their whisperer from the Wall Street Journal was wrong. Now, the whole reason that they have a whisperer is in case at any point in time, the market's expectations are different from what they plan on doing. Unless they're trying to outright surprise the markets, and I don't think that they would want to surprise the markets, giving them higher expectations, like a tighter expectation, and then come out there dovish. That would just be silly. That would just forget trying to undo everything they were trying to do when that rally took out a lot of their easing that they've spent 6 months doing. That would be silly. So I don't, gameplay it out. I don't think they're going to do that. And I think that they like having this little outlet in case at any point in time the market is currently erroneous in what they plan on doing. The Fed has been very clear in their communication, including and probably starting from with, they weren't very clear when they told you inflation was transitory. That was really bad communication. But October 16th, Fed meeting minutes, when they talked about tapering, and we went in here and put out that infamous tweet, 2022, in quotes, rate shock, Bitcoin is not immune. I mean, that's when the communication has been crystal clear ever since, and they continue to do that. But the market is now aware, and the market here this morning is coming off, and I'm looking at the NASDAQ here. Oof. So, all right, this is going to be fun now. When I say it's going to be fun, we were just looking at the DXY and we were looking at something we talked about last week. We were talking about those trendline breaks and liquidity grabs. I'm talking about this area over here. On the NASDAQ, we had a breakdown, trendline break, and then price was after the breakdown, CTM, retest. And we're watching this retest today. This line is very important. Do we close above or below it? right? Are we going to have a successful retest of this line? By the way, you could say that that line is being pierced. In traditional markets, we don't take breaks of trend lines. You know, we do that in crypto markets, specifically during bull markets. Now, come ahead and add another trend line over here, like, and this is where this is so subjective. So I'm trying to figure out, like, where do I want? I'm gonna have that line like that. I want to tell you why. It's very subjective. I focused my eyes over here and on over here, and I had to say that I'm gonna just like let go. Now, there are some people out there who will tell you you have to go ahead and always use the top of the wicks. Like, it's like that. And there's other people who will always use the closes. And they're very black and white. I'm not like that. I'm very easygoing, and I'm paying attention to and trying to pay attention to what the market's paying attention to and what the market's showing me. In last week, in some of our sessions, I showed you examples where you had trend lines that the market definitely confirmed going forward, and they were using some closes and some wicks. So you got to be flexible. By the way, here at CTM, we also do one-touch clone trend lines. Clone trend line is like this, taking the trend line and cloning it off that wick. What you could see is another breakout over here of this trend line, of the one we just put in, and then you could see another wick into that last one over there. Now, this is just, I'm not going to do that right here. I'm just leaving it like this. And the reason being is because if we break out above this trend line, I'm going to say that, well, this was over here a false breakdown. Not only is a false breakdown, it's a false breakdown as the market begins repricing a 75 basis point hike. The market's now prepared. And if we get a breakout to the upside, it's most importantly a break back above this failed breakdown, that green line. Coming in for the retest, we expect it's going to resume down. And if it resumes down, which could happen this session, right? And by the way, that over here would have protected you. Like this trend line over here, someone over here, like they could be following price in the morning and they're like, oh, it's green. It's breaking, I'm buying. But like, this is to protect you. A predator watches, a predator waits. You're waiting until you see your prey and you know that you have a clear and clean shot. You're not just looking to go ahead and run at a herd of gazelles and just like each one that passes, you change your direction and run the other way until you get one. Yeah, you're a lion. Maybe you're going to get one, but you're not doing it very smart. If you have a breakdown and a resumption, what are we looking at on the downside? We have this whole area over here that we'd be targeting and then setting up and getting ready for a breakdown of the yearly low. But we got to give it more time. Let's look at the S&P 500 this morning, see what it's doing. Similar, a little bit weaker. When I say it's similar, it's coming into that breakdown, retest. That's what we're seeing right now. We're expecting and looking for a resumption, right? That would be a big technical breakdown and continuation, right? And then at the same time, do we have a line over here on the upside that we want to look at to see when we have the all clear? Is that it? Is it? Yeah, it's very similar. I'm going to leave it like exactly like we have on the NASDAQ. The DXY we already looked at, the 10-year, it's kind of funny that right now it remains off a little bit as the market begins pricing in further hikes. But look, this is like a conspiracy theory. Well, no one's conspiring. I don't think it's a conspiracy theory. Here's a tinfoil hat theory that it is possible. One thing that could happen in the days ahead. Now, I can't even tell you what type of probability I assign to it, but is it possible that the market begins to price in a 75 basis point hike as being a policy error, as being too high, and therefore the market says that's going to be the last hike? I doubt it, but it could happen, and I want to be prepared. And so what that means is, like, go back to 2018, Fed, December 2018, hikes rates. Paul Tudor Jones on CNBC, he's like, that was a policy mistake. That will be their last hike in the cycle. The market reverses. Risk rallies for 2 weeks into January, and then the Fed makes the verbal pivot. The market priced it in before the Fed announced it to everyone what their intentions were. Could something like that happen? We got to be prepared for it. Anything could happen. It's the markets. Watching over here, just for that sell impulse over there. I think it's much easier. We'll just wait until we have another red line jump off, but we'll be watching any type of trend line breaks. But true to form, CTM, there's no question about it. We did track over here when we had this breakdown, that yellow line, and then come back above it. We were looking for price to go sideways. I wouldn't say it's exact or that we got it, but we got the general idea, except that we went down a little bit more and went up a little bit more, right? We were looking maybe in this range or a tighter range like that for price to go sideways and being careful not to get caught up in that chop. And right idea, timing not perfect in that we went down a little bit lower, but that when we had a trend line like that, and below it, we're like, all right, bearish, above it, back bullish. So that served the same purpose. And I think that is pretty much going to continue, or expectations that we could be in this range, and it's a big range. So that seems healthy. That seems good. Again, people often always expecting straight up, straight down. That's not always how it works. And this is for sure right now sideways. Oil's the only thing that continues to trade appropriately. Now, I know all of the energy experts got it wrong, and they did massively, right? They were expecting because of backwardation and because of the supply side, the price should be trading right now well above 120, but price does not lie, and price is what it is. And right now we just took out that low over here. So we are seeing oil, from my view, either we're seeing one of two things. Most likely, we're seeing for sure the strategic reserves being drained into the midterm elections as an attempt to go over and get price of headline inflation off, right? That's massive manipulation. That should be illegal. That's actually like a national security threat for those in the United States. If right now and all of a sudden a hot war were to begin and the U.S. has drained its strategic reserves, that could present a problem. And when that was done for the reason of trying to bring down temporarily headline inflation, look, I'll be the first to say that seems like an impeachable offense. I'm a patriot. I'm an American, and I have my country's. Let's say I'm looking out for what's best for the country and the people of the country. And I don't think causing some time of near-term distortions in the market is a good thing. I'm very worried about what happens as we move forward. You could say that right now oil is pricing in a coming recession. This quarter's growth is not indicative of a recession. And the job market, obviously, whether it's fake or real, is not reflecting that as well. I'm sorry. If you go out to the local restaurants and store, it's not really indicative of a recession either. I know that technically there were 2 quarters of negative GDP growth, and I get it. But anyway, there's nothing really there. Is this pricing in a recession? Potentially, for sure. My worry, and my greatest worry to what's ahead, would be to see some type of repricing of oil in the months ahead and it gaining a bid, and a strong bid, especially if the economy continues to weaken. That right there would be a super sign of coming severe stagflation, and that would have me very worried for the state of the overall economy. Let's take a look at that. Is crude coming in for a retest of the top of the trend line? Oh, I have to mention this because it's very important over here. For me personally, we look at the coming, let's call it as far as we could look out. Let's call it 2 to 5 years. And it seems that for sure the commodities seem to be or should play some type of position in your portfolio. I am really hesitant about buying, and I won't do it, buying any type of oil in the paper markets. The truth is, I don't have the capacity at home to store the physical stuff. I can't do it. So that's not an option for me, right? And I remember when oil went to zero, crude oil, June contract trading negative. So that's got me spooked on the market itself. Just making that observation and or point to you. Is it possible that we're targeting down over here, this lower trend line over here, somewhere around, let's call it, that would be like 75, or is that even drawn correctly? And should that be off the wick down over here? Could we be targeting somewhere around 68? I think you need to look at them both. I'm going to first, because I see this touch over here, and then that's where price kind of on the daily just wicked below, but found support. And then over here, I'm gonna keep this line like here, but this is loose. I'm not personally targeting it. I'm not in the trade. I'm more of on the swing traders time frame on that. And that was, again, we caught a beautiful sell impulse. And then over here, keeping it short still, making sure to watch what happened in this area. We did it here together on these public live streams, right? And that right there, master the art of trading, is pretty good. A lot of people bought not on the breakout, the trend line break. A lot of people bought here on this day, on this break. Go to Twitter and look at the Twitter feeds, and everyone over here is going long oil. And we were like, no, we look for a breakout retest, and we want to see a retest and then a resumption off if we're going to all of a sudden change our, from sell impulse to buy momentum. It didn't happen, and that's all I could say. But I can't say whether or not, Juan, we're targeting below or where we are. I'm completely open and flexible, and on a smaller time frame. I don't have an opinion. I don't have a bias to share. Well, that's going to be very helpful. Silver finally potentially getting a bid today. Is there a reason I'm looking at gold? Is there a reason to look at it today? I'm not sure, but here I am. So let's see this. Let's take a look at silver, actually. Let's look at silver. And I'm looking for where the breakdown was. So what I'm going to do is going to put in this line right over here. All right, that line is terrible. How about that line, right? Why? Look at the touches over here, and then again to this one, and then they found resistance. So that's not a horizontal line. I think that's a good look. I'm obviously going back, and I'm doing this in hindsight. I can't remember the last time I had a silver pulled up. It's been a couple of years. But I'm seeing over here for sure, breakdown, retest, resumption down, and now in for another retest. So above that line, that would be interesting. And then what about another trend line over here? All right, let's go ahead and draw this in so we can come back and check this and watch this in the sessions ahead. All right. So a trend line break over here at this high and this close into resistance, I would be standing aside. This one is Paramount over here. This trend line right now is Paramount getting back above it. That might be signs that you are seeing a reversal in the gray metal. So we'll be watching for that. But I wouldn't take this trend line break over here right now. I'm going to push this all the way up to here, and we'll have it down. If price comes down further, makes another leg down, then extending that out and waiting for the trend line break will make more sense. Bull, right? That's a good memory. Time to come back in. Hey, he wasn't happy about keeping him sidelined when everyone was bullish, right? But in retrospect, he could be like, you know what? CTM, maybe you were going to be right on time, but we'll just keep watching that for fun. We'll watch that for fun, and we'll see what happens. So, good session here this morning. So why do I choose the 8-hour, not the 4-hour for trend lines? I mean, so it's a really good question. I have a really good video on TradingView. I'll try to pull up in the tab for tomorrow so I could share it in the comments that explains why I trade off the 8-hour time frame, and it has a lot to do with the rhythm of the day. coming from the foreign exchange markets, you had three significant sessions. You have Asia, and then you have London, and then you have New York. And the day is broken up into that rhythm, right? Those are the three sessions of the day. It turns out that the 8-hour provides a really good filter of just normal market price fluctuations and chops that are often seen on the 4-hour. From my own experience, my limited experience in the past 20 something years, it was only during the 2008 crisis that the 4-hour briefly in October, September, maybe just October, but around that time, it really outperformed the 8-hour. And that is the only, I mean, the 8-hour performed extraordinarily well, but the 4-hour outperformed it. That was the only time. I imagine it's possible at March 2022, there might have been good select, but we got into 8-hour swing trades and then turned them into position trades. We saw the dynamic of what was taking place early, and we were quick enough to adapt. The markets are not crashing. The markets are crashing. No longer are you looking at taking swing trades. Hold these trades, push those trades. And that worked out being really well. So the 8-hour, I would say, was a better benefit in that time period. And then, take it to where we are today in our systematic trading and, that intuitive nature of a trader and their experience. The data now backs it up. I mean, the 8-hour is the most profitable because we've looked at everything in all time frames down to the small ones and low ones. And in the cryptocurrency markets, Bitcoin, Ethereum, across the board, 8-hour outperforms. So I know that a lot of people, they are attracted to trading. And I used to trade the 3-minute E-mini futures. And you think that the lower the time frame I trade, the potential I have to take more trades and make more money. Not entirely, not true, And again, you're looking just Ethereum in 2020, you're looking at 21 trades. It's not like you're not trading a lot. It's 21 trades. It's almost a trade a week, right? But again, you have like trades going from middle of July to middle of August where you're in one trade holding it and pushing it. And then you have like what's happened between the last 24 hours where you take a trade on the long side, get stopped out, take a trade on the short side. Maybe that's going to get stopped out too. I don't know, And there we go. I never heard of UDOG, Jay. I don't know. I know that if you are, for example, trading right now in the cryptocurrencies, why there's always risk, and you have to be aware. Really, like you have to pay it, like really give it some thought, do some research about what exchange you're trading on, why, what your risk is, and understand anytime you have any money on an exchange, the risk is, and the third party risk is that you could lose it all. But right now, Binance does offer 0 fees trading Bitcoin. That's a big deal. That's a huge advantage. Either way, I don't know what the fees are. One of the things I would look at before I dug deeper, headline, I would look at fees. If something is trading above, let's call it a 2% fee, 0.2% fee, like FTX, that's the line. Anything above that, I personally would stay away from, and I would find something that's going to give me a better edge. And that's one of the better edges you could get, the lowest cost of doing business. Rob, how do I distinguish between trend lines' importance? For example, when I was talking about over here, Rob, in real time, and this is one trend line, and then this one over here, and I was saying, well, if there's a trend line break, I wouldn't take it. I would give it some room. It's because it's very close to resistance. So I don't want to take, this is first of all in a downtrend. Like this isn't a downtrend. So really the trade is to be what? You want to be selling off of resistance in a downtrend, right? So I'm not going to buy into resistance. This is resistance in the downtrend, right? Now, at the same time, well, that I can't even say or anything. Like that's number one. But getting above this area, getting above this resistance, you're no longer in resistance in a downtrend. And, from my lack of studying bottoms and tops, because I'm the guy who's always looking for the sweet spot in between. That's where I make my money in the trend, in the sweet spot of the trend. I could see if we did have any type of reversal over here, that is looking like a potential trend reversal. So I'll be watching it for fun. But Rob, that was for fun, and that was noted as for fun, just in order to go ahead and continue, right, with these old school CTM 1.0 TA sessions. So that's it for today. 99 likes. We almost hit 100. It would be really cool to end this Wednesday morning. There we go. Thank you for the love. I appreciate it. Everyone, thanks for the fantastic session. Thanks for being here. Thanks for showing up to put the work in. And I look forward to navigating these uncharted territory with you. The markets that we're in today is like nothing that no one has ever seen, right? And we're not only looking to survive, we're looking to thrive. So thanks for being here, everyone. Have a beautiful day. Mike, this is a good one. So are we recommending people continue their dollar cost journey from here? This deserves probably a video on itself. I do, from afar, Rob. For sure, I do. So let me come to the 3-day. And, it was CTM, trendline breaks. This, by the way, how simple it was. This is CTM with massive upside expectations over in the fourth quarter of 2021, looking for a blow off top and significantly higher prices on Bitcoin. And this trend line right over here, I think that it puts us among the earliest to see the technical breakdown that took place. Now, outside of a couple of people who were trying to pick the top the whole way, or those that, at this point in July of 2021 were very bearish and looking for lower prices, claiming victory now, but they missed 120, 30% move to the upside to new all-time highs on price. That's dead wrong any way you look at it, right? And at this point in time, we had a trend line break. We're able to say, oof, technical breakdown, de-risk, take all profits on the paper side, right? Specifically from this whole area, from all the profits that you got into in these trades. It's time to get neutral, right? The other time to get neutral was over here on the break of 50K, and that was coming up from the whole bull market run. So two areas where we had two surprise, for me, breakdowns, both of those, take profits, get neutral. That was the first time taking profits during the bull market that Elon Musk just jumped into a pond and made it all muddied. And then late, Rob, this is what I was getting at, late, because that was technical breakdown. But in January, coming back from Christmas vacation, the messaging out of CTM was do not dollar cost average. Do not dollar cost average. Do not build up reserves. Up until this point right over here, this was the collapse of Luna, and Bitcoin hit 25,500. And then at this point, from my humble opinion, it was a good time to return to dollar cost averaging. And that continues no matter how much lower or for how longer the price of Bitcoin goes. This deserves a video, not only in strategy for dollar cost averaging, it deserves a video for expectations of where we're coming into the next halving. It seems that a lot of people now have embraced four-year cycle and four-year cycle theory and are not looking for, let's say, price to make a new all-time high until after April 2024, approximately 6 months later. So talking about the later half of 2024 into 2025. And if that's what happens and you're dollar cost averaging now in a very short time, in 2 to 3 years, you're setting yourself up to be in a really strong position. So I do personally think it's really smart to do. Now the whole thing is, this is real. If you didn't learn that it's Fed policy, CTM 2020, the greatest risk to the bull market is the Fed and its Fed policy. No, it's not Tether. No, it's not the government. It was Fed and Fed policy, and that turned out to be true. Again, expectations, and my expectations where this was going to go and blow off significantly higher. It's not what happened, you know? And that should be the same posture going forward. You can't make assumptions and build your strategy around that maybe price doesn't make a new all-time high to, sometime after the halving. You don't know what's going to happen. And just like this was largely because of Fed policy, what do you think the Fed policy is going to be going forward? We don't know, right? That's what we're trying to do each and every day, is make sure we figure it out and stay on the right side. There's no question Bitcoin is hope. Everyone, have a beautiful day. Thanks for this session here, this fire session on this Wednesday morning. Thanks for being present, for putting the time in. Everyone, no, Shark, there's no discount codes for any of it. It's the opposite. Like last week on CTM, with like the discussion that took place on Thursday or Friday was like the opportunity to work on team with me, with all of you, that is being removed. It'll still be available for a select few, but that's being removed. And then even further down the line, what we're doing here also will no longer be shared or accessible. We'll just have what will be a far better course than anyone has access out to in the markets, but it's not going to be doing what we do here. And as far as like far better than anyone else is doing out there in the markets, I mean, Ethereum, like since 2020, if you could put up a 2,000% return with a 36% drawdown, yeah, I feel comfortable about teaching you all and anyone else how to do something along those lines, which is absolute fire, but it's not what we're doing. No discount. That's actually being changed. The pricing is going to go, I don't have time for that. But when I get to it, all of a sudden it's just going to change. I'll give you a heads up if I can, but that's not where my focus is, right? And then someone else is like talking about, I remember recently about like, well, it's a good thing that you structured it so that like as you continue to work and grow and evolve, you're always sharing that new information. It keeps people engaged. I'm like, no. That's not how it works. Like there's going to be a time when that's not even possible anymore. You don't have the opportunity to be with us. That's just the way it is. But I'm out here, forget paying. I'm out here giving you free information and fire information that you're not finding elsewhere paying a ton of money for, including the question you asked about low volume. That right self, like that type of interaction in discussion is gold, and you don't need to pay for it. It's right here. It's for free on the public side. And I'm here every day, Monday through Friday. Invest your time. I'm investing my time with you. Invest your time with me and gain a wealth of knowledge. That right there is for free, and it's going to be better than any other paid course you're going to find out there. That's what we're doing here. Oof. Bank of Canada in with a tight hike, 75 basis points. And now we're looking at potentially, or likely, I should say, 2 days from now or tomorrow, the ECB responding in kind, central banks around the world making a statement. And what a silly statement it is. What a silly response it is. And then I look at, I'm not going to get into right now, the responses we've seen specifically coming out of Europe to this energy crisis. And it's almost as if they're trying to like just dig a deeper and deeper hole. Anyway, everyone, have a beautiful time. I'll see you all tomorrow. God bless you and have a beautiful day. Mike, thank you, brother. I'll speak to you all soon.